Hi, everyone. Thank you so much for being here. My name is Drew Norton. I'm a second-year law student here at Colorado Law, vice president of the Silicon Flatiron Student Group, and executive editor of the Colorado Technology Law Journal. It's my pleasure to introduce our speakers this evening, Seth Levine and 𝗧𝗵𝗲 Seth Levine is a longtime venture capitalist and co-founder and partner at Foundry, a venture capital firm based here in Boulder. He also advises venture funds and companies around the world supporting entrepreneurship and economic development. 𝗧𝗵𝗲 is an award-winning journalist, author, and consultant who has spent her career reporting on finance, technology, and social justice. Together, they are the authors of Capital Evolution, The New American Economy. Please join me in welcoming 𝗧𝗵𝗲 and Seth Levine.
So you guys, thanks for joining us here tonight. First of all, I just got to say, I'm a new guy on the block here. This is my 5th month in this role. And when I came here, I gave myself an assignment. I wanted to read a couple of books, get up on the local scene. One of those books was Capital Evolution. And so I've been looking forward to tonight's conversation for months now. And so thanks for making it a reality. All right, so we're going to dive in here. You guys, this is not your first book together. So my first question is, how did you meet? And how did you start the co-author collaboration conversation? Elizabeth, what do you got?
It's fun when this question falls to me. So Seth and I met about a decade ago, maybe even a little more than a decade ago now, when we were both working in the West Bank. I was a journalist working for the United Nations on economic development issues in the West Bank. I was a writing fellow. And somebody said to me, wow, you have to meet this American venture capitalist. He's here mentoring Palestinian startups. And so I thought, well, this is interesting. There's not many of either of us in the world who would be on that particular mission. And I looked Seth up when I got back to the States and came through Colorado. Pick it up from there.
Sure. Yeah, so we started trading ideas about, I think you actually interviewed me first. So you interviewed me about something, Palestine, something. Yeah. And then we started like sharing stories about like interesting entrepreneurs. And at one point we got together, you were coming through Boulder again, and we were like, we should write this up in a book. Like, these are cool stories. We're going to call it Faces of Entrepreneurship, and it's going to be this sort of like lighthearted coffee table thing. And then we started doing a bunch of research around the people that are starting businesses today. And we realized there was a much more important story to tell about the lack of support for, well, first, how many more businesses are being started by women and people of color, immigrants, as they always have been, but also what a poor job we've been doing connecting those founders to capital. And also this sort of subplot of like venture capital or the tech community kind of stealing the word entrepreneurship and sort of taking it away from really the rich fabric of people that are starting businesses. And so that's what became The New Builders, which is the first book that we wrote together.
All right, so this is book number 2. Why this
three? Well, 3 for Elizabeth.
3 for Elizabeth. All right.
She strayed for a minute. Took something on the side. It's someone else.
But I came back.
You know, if we have time, we've got to explore that line of questioning here today. So
I'm totally cool with this. Completely fine.
I don't know, jealousy. I don't know. So your second book, your third book, your second book together.
Yes.
Why this book? Why now?
Well, I'll start. Obviously, Seth and I have a great friendship. And so we wanted to do another book together because we had a good time and felt like we made a big impact with the first book. And we were casting around for an idea that would be, books have to have a long enough shelf life. And it's forever, basically, right? You're hoping to write a book for the ages. But it definitely has to last for at least 2 or 3 years, because that's how long it's going to take you to write the book. And so we were casting around for an idea that had enough kind of like heft. So we went to the high end of that and decided on capitalism. Because I think I was noticing in my world, I consulted the World Bank. I have kids who are kind of in college, or increasingly disenchanted with capitalism. So I was noticing that, and then Seth was noticing in his world.
Yeah, I mean, what happened was I had dinner with a portfolio company. I was the only out-of-town board member, which was only relevant because everyone else had left. It was me and the management team. This was in New York. And we were talking about, it was right after the Dobbs decision was handed down. another CEO in the Foundry portfolio had written something on LinkedIn about it, and got a bunch of feedback, a lot of it anonymous, on both sides. People saying, "Hey, you didn't go far enough," and other people saying you went too far. And the CEO asked me a question: would you accept a lower return for us living our values? And he was sort of talking about, like, look, we work with Fortune 50 companies. I hadn't thought about it. We changed our logo for LGBTQ plus month. Like, I hadn't thought about that and what the reaction might be. Like, should we be talking about these issues, and would you accept a lower return? And I gave him like a typical VC, like, oh, you don't need to choose, and well, that's a false choice, which actually is what I do believe, but I don't think I gave it enough credence at the time. But anyway, that was one of those questions, when someone asks you a question and then you forget about it 5 seconds later, like, that's a lot of questions. This one just was like waking me up in the middle of the night. So I did what I often do, which is I called Elizabeth and I was like, well, here's something that's kind of interesting. What do you think about this, right? And you'd been chewing on this sort of bigger questions around capitalism, and these things all kind of relate. And Elizabeth's answer was her typical answer, which is, because she's a journalist, she's like, well, we should interview some people about this idea. And so we actually did our first interviews without this idea of like what the book would be. We just wanted to talk to some smart people about the role of businesses in society, where capitalism is headed, things like that. And that really quickly, as we started talking about it, and especially as we started sharing the idea with friends, all of whom were like, yeah, that sounds really interesting, but I don't know what the right answer is. That's when we realized that there was really something there. But it was probably 2 solid years of interviews, and I didn't count it, but probably about 80 interviews. It was a lot of work.
So at what point did you realize, yeah, it sounds like it, a lot of fun, right?
Yeah.
At what point did you realize you had something here? Interview number, do you have a sense?
We had a great interview with Dan Schulman from PayPal.
By the way, cold email Dan.
Yeah.
Just said, we're writing about, this is probably when we knew a little bit. Like, we cold emailed Dan, we're like, hey, we're writing about this idea. We think you'd be a really interesting person to talk to. Obviously, we got lucky because it was at his desk. He wrote us back 5 minutes later. It was like, I'd love to talk.
Yeah. And then we were like, okay, there were a lot of people thinking in a very systematic way about the future of capitalism in the business world. And I was noticing too, as a journalist, that I've noticed this forever, like being 20 years or more, that business people are demonized in many sort of media spaces. And I thought there's just such something is not right here, right? I know all these business people who are in fact very sincerely worried about the future of the world, worried about inequality, taking real steps in their companies to try and be systematic. And yet there's no sort of like crossover bridge to talk about that outside the business world.
And if we're being frank, the other thing is we read a bunch of books about the future of capitalism and they sucked. Like, they weren't good, right?
Well, that was mainly Seth's.
And I was just about to say, it's just in the room, and now I'm looking at the on-air thing, like, okay, just broadcasted that. But the truth is, we read a bunch of books and we're like, these aren't really good.
They weren't very good. They were not.
They were either like super academic and not sort of realistic, or they were like one person story, which is like sort of interesting, but only extensible to the people that are also building the same kind of businesses. And so we thought, there's a better book to be written here that tells some of these stories, but is much more accessible. And hopefully that's what we ended up.
So pragmatic too. Yes.
And pragmatic. Now, we are at an institution of higher education here. Would you consider that reading of other books you thought sucked your literature review? I don't know if I saw it all referenced in the book, but nonetheless, you moved on quickly. All right, so it sounds like you had a hunch. You had some great conversations. You knew you were onto something. So as Ed mentioned, I read the book in the fall. And for those of you who don't know, I'm a recovering politician, former Minnesota state legislator. I was ceremoniously unreelected, retired, whatever you want to call it, in 2016. I could hear the frustration at the doors, knocking on like 10,000 doors that summer of 2016. Yeah. And the thing that really stuck out to me is over the last decade, we've had 2 big populist movements on the left and on the right in this country. And really, if the common denominator, if you have one, it's I think frustration with the failings of modern American capitalism, if you will. And so I'm just curious, without trying to address the political divide yet, we'll get to that later. To what extent did those movements influence your interest in this topic and how you dealt with it?
That's a great question from a political angle. I was I had a book on my shelf when we started, maybe even referenced it once or twice, that was like the growth of populism in America. And I had been in New York City kind of when it's weird that New York City was one of the birthplaces of the right-wing populist movement on the economic side with the Manhattan Institute. So I had some of that in my head. I was generally irritated. I was irritated by both sides, right? I'm irritated by people on the left who want to prescribe. I'm being very blunt. I'm irritated with people on the left who want to tell me what to think, kind of like in a very prescriptive, moralistic way. And I'm irritated with people on the far right who are authoritarian through the government, but it ends up being the same. So that's why I was motivated. I was like, we've got to find a middle ground because I don't want to live in this country with these swinging like this.
Well, and I think one of the observations of the book isn't about politics, but the book describes our current political environment. And one of the observations is that populism on the left and the right are the same thing, right? It's sort of the embodiment of that was when Mamdani went to the White House, and it turned out they agreed on everything, right? And they or at least they agreed on the antecedents, like the precedents to what happened. But when you have an economy where executive pay has increased 900% over the last 35 years, but worker pay has increased by 12% over that same period of time, where 50 years ago, if you were born in the bottom 25th percentile wealth, you had a 25% chance of dying in the top 25th percentile, right? Today you have 5, right? If the average age of a first-time homeowner is 41, like all of these things add up to people feeling like they can't get a step on the ladder. And so not surprising, people are pissed off. Now, their anger gets channeled in different directions depending on where you are on the political spectrum, but sort of what's behind it is both understandable, and I think we could probably do a better job of listening and acknowledging the frustrations. We talk about this a little bit in the book as well, but like what their frustrations are kind of the same thing.
Well, maybe we'll revisit this because I think there might be something there, and maybe that's my bias again as a former Paul. Okay, so it's pretty clear. We've got unsettled folks on the left and the right, people you're talking to, everybody, I think that we engage with in modern America. Modern capitalism didn't devolve overnight. So we've only got 45 minutes here before we open it up. But how did we get here? You want to do a quick snapshot? How did we get to where we are in 2020?
1,300-page book that thank God didn't come out while we had to read it. For our book, I still haven't I've heard it's good, but I haven't brought myself to read it yet. It's really thick.
Yes, I know. I've seen it.
Is it Capital?
It's the one by the Harvard professor.
Yeah, I can't remember his name. I can picture the book. No, it's called Capitalism.
Yeah,
it is.
A history of capitalism.
There's another great book called Capital by 𝗵𝗲
Yeah.
I'll tell you what, that one,
Yes.
that's Capital in the 21st century. That is also very long. What is it with these guys? Yeah, seriously, I did read that one, and I was like, oh, you get 500 pages in a book, and you're like, I'm pretty sure he said everything he has to say.
It sounds like we're starting to talk about the literature review here. All right, it's going to come out after the event this time.
Okay, I'll give you the quick history, which is that so one of the ideas that we came to the book early in the book, we sort of recognized the idea capitalism can evolve, although it's familiar to a lot of people, not familiar to everybody, and so we kind of took that as like one of the central themes of the book. And once we had sort of gotten that idea in our head, it was easy then to see that the form of capitalism we are practicing now, which is neoliberalism, started in the 70s, and then there was another iteration of capitalism before that. And once you see that capitalism can evolve, it becomes a much more optimistic and pragmatic approach to things.
And yeah, well, here's something that's interesting. Well, so there was this, after World War II, the U.S. entered what is the golden age of capitalism. Trump likes to talk about it a lot, but there was a period of time that historians refer to as the golden age of capitalism. Our economy was growing faster. It was growing on a more equitable basis. And then it kind of changed in the 70s. Milton Friedman wrote his book in the late 60s, and then he wrote an article in the New York Times talking about how the only job of corporations to make money for shareholders, that was 1970. It took a little bit for those ideas to catch hold. People sort of blame Reagan and Margaret Thatcher because that's when neoliberalism really took off, but it was actually changes at the FTC by Carter that at least I would trace back as the
One of the-
real start of sort of how neoliberalism took hold, right? And that really related to how do we lower prices? You can sort of understand we're in the energy crisis. Carter wanted to figure out how to bring those prices down. One of the ways to do that was to basically take controls off of companies combining and getting to scale. And so he made several pretty key changes to the FTC that resulted in what became sort of the merger mania of the 80s. But that was kind of what started neoliberalism. But neoliberalism, like, I guess in our read, is sort of over, right? Like we're in this sort of messy something afterward.
we called it a Frankenstein version of neoliberalism
Yeah.
that we're in now.
Well, you called it that, and
Okay.
then now I call it that because it's such a great phrase. Yeah. But yeah, that's where we are, this like kind of Frankenstein economy. Now, maybe we fall back to neoliberalism. This is one of the challenges in the book. We talk about, we have a choice to make, and we're going to go across, one of a number of paths. But one of those paths is we keep operating like we have been, right? I mean, Trump talks like a dynamic capitalist or a new capitalist, but he governs like a neoliberal. And he's kind of an interesting figure in that sense. But really, we kind of, like, the economy's kind of pushed past this, and clearly the conversation and the desire is for us to adopt something else. Now, that could be socialism if you ask the DSA or Democratic Socialists of America folks, and there's some reasons to believe Minneapolis actually has a big DSA movement that mostly failed and now has kind of come back more to the center. But we've seen that in Seattle. We're obviously starting to see that now in New York. But there's multiple paths, and that's kind of the challenge that we outline in the book, which is where do we want to go? We obviously chart one path. Dynamic capitalism is what we call it, but it's not a assured thing.
So folks, here at Silicon Flatirons, we really focus on interdisciplinary study. And so this is coming out alive and well here tonight. So we had the Gilded Age, we had the Golden Age, we had neoliberalism, we have what we have now. We'll get to that a little bit more in detail when we, open your book. But I think the point that you're making here is we've had a history of evolution in American capitalism. We are where we are today. Where are we going to go next? One thing I wanted to ask you guys about here before we really get into it is, as I'm reading the book, you introduce a term, American exhaustion. And I think that it resonates with a lot of folks that I talk to. I think we all kind of feel exhausted, and not just about our politics, but about the state of the economy. And I don't think this is necessarily a new thing, but could you talk a little bit about that, just in teeing up how you talk about dynamic capitalism, American exhaustion?
Yeah, I think it was one of the other motivators or the main themes of the book that emerged. And this came from the dialogue between us, which is, so I'm from a very middle-class family, right? My dad was in the military, and three of my siblings, my brother is in the National Guard, and then my two sisters are both teachers. And I was hearing from my siblings how bad things were. I was hearing from my one sister who teaches in Atlanta that they had gotten a worksheet or a form letter that they were issued anytime one of their kids became homeless. And I just thought, this is in like sort of a normal suburb of Atlanta, that there was a lot of distress going on in the economy that we weren't necessarily seeing.
So I'd like to double down on the economic conversation a little bit here. So if you look back, the Great Depression gave us Keynesian economics. And if a rejection of Keynesian economics, maybe with a dose of authoritarian communism and Cold War politics, informed the Friedman doctrine, let's talk a little bit about where we are today. You talk of, Frankenstein economy. I mean, would you like to say a little bit more before we really tee up conversation about dynamic capitalism?
That's a really...
I want to give you a chance to go.
So before we get into it, like,
No,
we're not
right.
already in it. Exactly. We are in it.
Yeah, I mean, that's a big topic. Seth, you probably have a better, financially rooted answer.
Well, I mean, I think what you're asking is why are we where we are? I mean, for starters, read the book, because that's it has more of the answers. Hard to summarize that in a couple of sentences. But I think that every age, there's a great book called The Fourth Turning. And it describes, I guess, and maybe I'm alone in this, but I think of every age building upon the last, but what it really describes is every age is in reaction to the last, right? And so we end up bouncing back and forth. And what the authors of if you read it, I kept going back to check the pub date, because it described essentially Trump coming to power, but it was published in 2000, and so it predicted this latest cycle. But I think it's important to think about sort of the economy in that as a reaction to what came before it, and I think that's why we are not fans of the Friedman doctrine, but we tried to treat Milton Friedman with a certain amount of just care, right, and try to at least understand where and why he came up with the ideas that he came up with. You have an entire chapter, it's called The Beauty and Fallacy of Milton Friedman, that tries to explain like what was he reacting to, and the other men in the Mount Pelerinus Society and who came together right after World War II to sort of create what is now the modern financial system, modern global financial system. Because we wanted to understand it in that context, right? And I think it's also important to understand, it's a little bit the answer, Matt, to the politics question you asked. Like, it's also important to understand why people have the reaction they do based on what their current circumstances are, right? And Elizabeth's story about her sister getting a form letter. It's so common that kids become unhoused in this district, even though it's a relatively wealthy district in a suburb of Atlanta, that they have a form letter. It's not like a one-off thing. It's like, yeah, this happened, so here's the letter you get. And I think like understanding those sorts of things, I think is really important. I think one of our observations was, I live in Longmont, but call it Boulder County. And Elizabeth lives in DC in Alexandria. And we exist in a little bit of these bubbles, right? And we don't end up actually interacting with people who are sort of in other circumstances, right? And it's hard sometimes, but I think one of the things that we really liked about this process, we write about it in the end, I can't remember if it's in the epilogue or just the last chapter, but about like our own personal journeys of like opening our eyes a little bit more and trying to expose ourselves to different ideas, different people, different views. We didn't necessarily adopt those views, but I think that when you talk about like American exhaustion, I think part of that is like we're so sick of yelling at each other, and I think however we did it, we managed to find ways to get people to open up to us who had very different ideas and different views, and at least try to understand where they came from. Yeah.
I would say I'm definitely more open-minded, I think, than I was 3 years ago when we started this book, which is a great, fun process, actually.
We debate a lot too. So
That could have had
I'm sure you have a lot of I mean, that's something in reading your book that I think really stands out is the fact that, hey, the history of capital evolution, if you will, as we've experienced over 250 years in this country, it's not neat. It's often takes the form of a pendulum, perhaps swinging in response to what's happened previous. And also, it's not operating in a vacuum. There are world events that really inform it. And so I think that context, at least as I'm reading your book, is really important in terms of how we got here. And so that brings us to what you introduced, the concept in your book, dynamic capitalism. What is it? Let's riff off of that. What do you mean by dynamic capitalism?
Do you remember the 4 pillars? It's been a minute.
We've got time. Go for it.
I know. Well, rule of law is the one that's been on my mind lately.
Yeah, no kidding.
That was the one that we added at the end after the Trump election.
So we had the stool, right? The 3-legged stool of dynamic
perfect.
capitalism. And then we're like, God, we got to add rule of law.
Yeah.
It's not a stool anymore.
Right. Right. Exactly. You remember the better than me.
I do remember.
Okay.
So there's 3 or 4, sort of pillars, if you will, of dynamic capitalism, right? The first is a long-term view versus a short-term view, right? Friedman, I actually don't think Friedman meant this, but the adherents of the Friedman doctrine really bastardized his thinking and writing and sort of lived quarter to quarter. And so we think that's a bad idea. So that's really important.
Yes, long-term oriented.
The broader ownership economy is something we talk a lot about in the book, right? People can't be expected to care about the markets if they don't have a foothold in the markets, right? So we talk about a bunch of different ideas about that. I'm sure Trump got the idea for what he now calls the Trump bonds, but the baby accounts from our first book, because we wrote about it in the first book and in the second book.
In fairness, many people wrote about baby
Fair,
bonds,
yeah,
but we
take
didn't.
credit.
What's the guy I'm trying to remember the guy who's always on this podcast. He's like taking credit for it now.
Yeah.
David something. But anyway, so like, those are ideas that we came up with that we think are important, but sharing more ownership more broadly. And there's a bunch of things around that. And the third is this rule of law question, right? Like you can't organize a market economy unless people agree on the rules. And we actually wrote a thing in the New York Times now, whatever it was, 6 months ago, talking about how Trump is sort of copying China in ways of picking winners and losers. And in so doing is actually creating a form of crony capitalism that will harm our economy, right? If our economy, America has always been a place where people with great ideas have at least a better shot at seeing those ideas actually turn into businesses and creating a better life for themselves. And that's based on the quality of your idea and not your pedigree and not who you know in politics. And we're moving sort of perilously kind of in that direction.
And number 4, did you say number 4? Because I remembered it while you were talking.
I don't know if I said it or not.
What did you say? The externalities? Because we talk about that sometimes.
Yeah, that's true.
Yeah. So the idea that that dynamic capitalism needs to find a way to measure the externalities, right? The damage that a company does by putting pollution out is the most famous example of it. Yeah.
So that's the concept behind it.
That's
right.
right.
But ultimately, the idea is that there are stakeholders other than shareholders that matter. And I think it's interesting because when we talked to Jamie Dimon, is one of the 80 interviews that we did. He's the CEO of JP Chase. And importantly for our purposes, he was also the chair of the Business Roundtable, which is a group of about 200 CEOs of the largest companies in the US. And they always they talk about certain things that are going on in our economy, not very often, but they had come out in a couple of different times to say what the purpose of a corporation was. And the last one that they had put out, which was heavily influenced by Jack Welch, was a Friedman-style company should only care about shareholders. And then in 2019, under Jamie Dimon's leadership, they came out with a new proclamation that said, hey, actually, there are other stakeholders that matter here. Those include our employees, suppliers, communities, and the environment. And one of the things we asked Jamie, and it was like November of 2019, people debated it for a hot second, and then something happened that I can't remember in March of 2020.
Right.
And all of a sudden we were talking about something else. And whether that was white greenwashing or whatever, like it was actually the start of the debate. We also frame it as sort of corporations seizing power a little bit in our mind share in our society.
I think there's a big question about companies' lack of accountability. They're the most powerful actors in society, but there's really very few systems of accountability set up. And actually, we're seeing one of the key ones decline, which was being publicly held, right? There are fewer and fewer companies that are publicly held now.
Yeah, by the way, which is bad for, I mean, if you care about an ownership economy, one way people do own things is through stock. About 60% of Americans own stock. Love to see that be higher, but you can't own stock in Anthropic or OpenAI or what any number of these, Palantir now or whatever, these companies that maybe you would want to if they're waiting to go public until they're $1 trillion businesses, right? So that all of that benefit accrues to the private shareholders, and the rules, at least we currently have around private share ownership, the law students in the room will know this very well, are pretty strict, right? Even though they got slightly less strict under the Jobs Act, but they're still relatively strict. So I mean, that's a good example of something that's happening in our economy for a whole bunch of different reasons, factors that are actually hurting the ability for more people to take advantage of opportunities, if you will, for investing.
And it's something we can change, right?
Yeah.
So once you recognize what these key structures are, then you can really work on changing them. And you can, I mean, I know I'm sitting here in a room full of future and current leaders, right? That we do all have actions we can take in the economy once you start to think about it, right? And take responsibility for it.
So there's a couple topics I want to follow up on here. But first, I've worked in policy long enough to know this trick. So the three-legged stool is a great way to kind of like introduce three awesome ideas. But if there's a fourth one, don't forget there are four-legged stools. And if you have a four-legged stool, if one of the legs is a little tippy, you're not going to fall over. So it's like a stronger three-legged stool. I don't know.
I like that. That's good.
I've used that in the past. Just
spoken like a true politician.
I don't know. I mean, I don't want to give you guys tips. It's your book, but
we're like 𝗖�59. Here's the fourth of our third pillars. Right?
Exactly. So let's double down on the third of those four pillars, or legs of the stool, however we want to call it. The ownership economy. This is an important thing, and I mean, I think it's worth doubling down and getting a little bit more specific on this. You're a venture capitalist. You've covered entrepreneurship and the economy. Elizabeth, how important is that truly? And to what extent should it be a key takeaway from your book?
I think it's a good, fair question, because it seems like a small thing. That's sort of when we realized that was the one prescription. We have a whole bunch of other smaller ones, but this was the bigger one, right? And when I thought, is it really big enough? And then I thought about what we do know about what works from neoliberal capitalism. And there is a reason the United States is the biggest, most successful economy, which is protecting us a little bit from some of the other things happening in the world. But once you realize what's good about that, it does really come from individuals' drives. And that's fundamentally a really powerful thing. So it's just a recognition both that the system's easier to change than we think it is, and also that ownership can grow big enough because it's backed by this fundamental human drive to grow, I think, to advance.
I think there's two things worth noting, right? One is that, and I think this can get lost for those of us that sort of sit around in tech land where sharing ownership is almost ubiquitous. It is absolutely not the case sort of in the economy writ large. And so we talk about a bunch of different ideas. So there's a whole chapter that has some policy ideas. One of those ideas is ownership. There are a bunch of others in there. But as Elizabeth mentioned, ownership is an important one. But we talk a lot about the role that ESOPs can play, or EOPs. There's like a dozen EOPs in the entire employee ownership plans in the entire United States. EOPs are a little bit easier than ESOPs for the lawyers in the room because they don't fall under ERISA. So they're a little easier to manage, but they can be super powerful. I'm thinking about my friend Dan who's sitting in the front row. You guys had an ESOP at 𝗧𝗵𝗲, and when you guys sold, everyone participated in that, right? We interviewed for the book 𝗬𝗃 𝗃𝗃, who it might surprise people to know is a managing director at KKR, right? Like Barbarians at the Gate, KKR, large private equity firm, and he's implemented this employee stock ownership plan across a whole bunch of different companies. Initially in their manufacturing sector, but now they've broadened, beyond that, and they're incredibly meaningful, right? One of the things we talk about is that employee ownership plans only work if they can be meaningful, right? And we're talking about multiples of your annual salary in an exit. And KKR found that their investments do better when employees have some ownership and have some say and start to think a little bit more like owners. Now, interestingly, Pete grew up very, very middle class, and he watched his dad, who was paid by the hour, have these conflicts around sort of what was good for the company and sort of the obvious thing to do, but that would mean that he and his workers would make less money. And I think that stuck in Pete's mind. Pete's since gotten a bit more famous around this. We kind of lucked out. We got him kind of right before he sort of took off, and then 60 Minutes did a thing about him. And how
We were first.
Everyone knows the timing.
He's a very sweet guy, but I like that story because like KKR is as rapacious a capitalist organization as there is, and they're a public company too. So if you are so inclined, you could be an investor. But what they found, and this just sort of proves the point back to the original, how did this even start? And I gave that hand-wavy answer, but it probably was the right answer to the CEO. But actually, those two things can be true at the same time, right? You can share ownership more broadly, and you can do better for all of the owners, including the owners that are doing the sharing.
So I want to follow up on that. And something that really stood out to me in reading your book too is just the emphasis on the middle class. And it's not just ownership for the sake of ownership, but what does that give us? What does that put the economy in a position to achieve? Can you talk a little bit about the importance of taking it that next step and what that investment in the middle class really means? We hear it thrown around a lot, but in your conversations, bring it to life.
Yeah, so I think that what the middle class actually does, there are a lot of economic things it does, right? We were talking at dinner about how important it is to have enough consumers to keep an economy going, right? 80 or 90% of the U.S. economy is
66% of GDP.
66%. So, but I think politically, this is where there's political economy, right? And I think the middle class really gives the country a political center. And it also gives, middle class gives a country an ideal of itself that's not always true, but true enough, right? And that's actually the American dream, which has kind of been, people scoff at it, but I still believe in it, absolutely. And I think if we can re-embrace it, we would sure be a lot better off.
And empirically speaking, again, because you can look at economies across the world, you can't really grow an economy without a middle class, right? It just doesn't end up working. It also ends up being very, very unstable when you don't have a stable middle class. And so there is a reason why when people talk about, for example, the growth of China, they talk about how many people have entered the middle class, right? Because that's the measure of the power of an economy. And there's a lot more in the book about this, as you know, but we describe sort of our treatment of the middle class kind of like the environment, right? It's a resource from which we extract. And we've kind of reached the limits of that, right? If you look at the debt load on the middle class, it was a little less noticeable during the zero interest rate time period, but of course now interest rates have ticked up. And there's just not the ability to continue to force, if you will, or encourage the middle class to consume in the way that they have.
Mm-hmm. That's when you're getting back to the American exhaustion, right? I think that's part of what people are feeling now is just, I said this on that Andrew Keen podcast, right? I mean, America's middle class has been like carrying the world economy for a while in some ways, right? We're being the source, the engine that kind of powers growth across a lot of the world. Trump is not wrong to recognize that underlying pattern. And, we're kind of at the end, I think, of our resources there.
And I mean, it strikes me that this is an important topic to focus on tonight because, if we talk about supporting entrepreneurs and startups, this isn't happening in a vacuum. We're part of a broader economy. And in order for a lot of those startups to succeed, having a strong middle class is key. I don't think you're going to disagree with that, but anything you'd like to double down on there?
Well, just because it gives me a really great opportunity to pitch the first book, because this is the idea that actually ties these two books together. We're capital. I mean, trust me, no one's making money writing books like this, I can assure you. But actually, this idea really ties the two books together, right? Because the first book really talks about the challenges of small business owners, right? And now there are lots of ways to be middle class, but there is a large segment of business owners who fall into that category, right? And are very sort of like fabric of community kind of people, described in much more detail in the book. But we describe in the first book how difficult we've made it for people to access the capital, the funds, the opportunity that they need to grow businesses. And we also talk really in both books a little bit also about sort of government and the role of government and where government's maybe getting in the way. And this is another area where we sort of fall in the middle, right? Like I think there's Reagan famously said government is the problem, right? And then on the other side, there's a lot of belief that maybe government should be solving all the problems. And the truth is like government should be limitedly involved in many things, right? And one of the things that is challenging about small businesses, I would point to Colorado specifically, since we're all from here other than Elizabeth, and presumably care about the Colorado economy. Like for the first time ever, Colorado's population is shrinking, and our business climate is seen as unfavorable. We're the sixth most highly regulated state in the country. I experienced this directly. My wife's a small business owner and a real estate developer. And we were trying to do something about setting up her, she owns a bookstore in Longmont, and we were setting something up for it. And it was impossible. She tried, I tried, our bookkeeper tried. She eventually called someone and they're like, oh yeah, no, you need to fill this form out. It's not actually on any website, but I'll send you the URL that's the direct URL, but it's not linked to anywhere else. Cause we were in this like hyper loop of like, you need to fill this form in order to take this next step, but then they wouldn't tell us where the form was. Anyway, that's just a one little example of ways in which we don't make it easy. And by the way, it's important to acknowledge, and we saw this over COVID, and we talk about it directly in the first book, that many of the jobs that people in the middle class have, we create barriers to mobility. So if you want to cut hair or be a plumber or electrician or whatever, that's not a national license. That's not even a state license. Mostly that's a local license, right? And we experienced over COVID this sort of challenge around, who had control, right, over health and safety regulations. Was that city, county, state, federal? But that's just an example of where we put barriers. And then maybe those barriers made sense 150 years ago when, you didn't know to trust someone 3 towns away because you'd never been to 3 towns away. But obviously that's not the case now.
All right, so I think that we understand that something needs to be fixed here. One thing that stood out to me in the book is not only, in bringing to light the overarching theme of the challenge and also the underlying data informing that challenge. You talk to a lot of folks, and I'm just curious whether it's Main Street or stories from Wall Street. Can you talk a little bit about the signals that you're picking up on from executives in the private sector that confirm or validate that this idea of dynamic capitalism is already taking hold?
Well, I think the biggest story that takes up probably chapter 2 or 3 is the one we tell about Dan Schulman, the CEO of PayPal. We referenced it earlier, it's actually I think it was probably more than 5 years ago, but he was early on to some of these ideas. And what happened is that he was doing a town hall with his employees, and as part of his preparation, he asked for an employee survey about how everyone was doing. And in that process of preparation, he turned up the fact that many employees at PayPal were not doing well at all. And the famous story is there was one gentleman who was selling plasma in order to get by. And so I think he had a family. And so Dan read this and he said it was like a light bulb going off where he realized the market doesn't work for everybody. Like he'd been sold this kind of bill of goods under Milton Friedman that if you let things take its course and you get out of the way, which we've done more and more at the federal level, not at the local and state level, but that it doesn't work out for everybody. Right. And so once he realized that it's not that he gave up on the idea that PayPal should be making profits, right? He didn't see it as a trade-off. What he did was set up a system that more accurately evaluated PayPal's pay wages in comparison to the economy. And then PayPal instituted a formula, and many of the employees ended up doing better, and their profits went up, right? Because their turnover went down.
Yeah, over time. And it wasn't actually that big an investment. PayPal's a
Right.
$4 or $5 billion company at the time. It was like a $10 or $15 million investment. But he had to go to his board and convince them to do that, right?
Mm-hmm.
And I think that, especially I think it's becoming more common now, but I think especially 5 or 10 years ago, that was like a harder call. But interestingly, one of the things that we asked Jamie about when we talked to him was, did you go to your board before you signed the business roundtable statement, and did other people go to their boards? And he said that he didn't. And we asked him why. Like, this seems like a pretty important thing. Like, you should probably check in with your board on it. He's like, this is how we always run our businesses. And I think the way that he framed it, at least, was this was just describing how business actually operates and acknowledging that no one really ever operated purely under the Friedman doctrine. It's a little like AI right now. Like, it becomes the excuse to do the things you want to do anyway. And I think people started using, I'm maximizing shareholder value as an excuse to, do all sorts of things that were good for their short-term value, but not long-term value.
Very good. All right, so I want to recognize that we are at the Silicon Flatiron Center for Law, Technology, and Entrepreneurship. And so I look at dynamic capitalism under those lenses. I think we've hit this a couple times already today, but can you just hammer home the point? Why is it so important for us to consider dynamic capitalism under the auspices of law and legal order? You mentioned it, Elizabeth, earlier, but I think this is an opportunity to say a little bit more about that point.
So we outline it in the epilogue at the back. And, I think there's a couple of things. Well, okay. So Seth mentioned one of them before, right? Which is this idea that you really introduce inefficiencies into the market. You've got crony capitalism, you've got people making decisions that really aren't based on their own interests, right? So there's that aspect of it, that you need to have a system that applies fairly. The other aspect is that when you have a rule of law, you also create a rule of norms. They're related to each other. And that as we're doing away the one, right, we're going to create a society that just relies on enforcement, and you can't actually function in that way, right? Nobody wants to live in that space. So those are two of the things. There's also the fact that the rule of law in business is it's contracts, right? It's basic to our system, to our entire system, not only business, but of everything. And in fact, we pointed out in the back that there's a reason the Magna Carta is on display with the Declaration of Independence, right? They're both fundamental to how we relate to each other.
The other thing I'd add to that is we're sort of living through a little microcosm of what happens when you don't exactly have the rule of law, which is it rhymes, but not so it's not exactly analogous, but like what's going on with tariffs, right? Companies are unable to make decisions about how to invest because they don't know what their import and export costs are going to be. We see it directly in our portfolio with companies trying to figure out how to navigate that and not making decisions to hire, spin up new opportunities, et cetera. And that's happening across our economy. That's just an example of like what happens when there's uncertainty. Business people pause because uncertainty creates risk. Risk means your return on capital needs to be higher. And so they either have a higher bar for those projects or the projects don't meet that bar and they decide not to do them at all.
The rule of law. All right, so technology. It came up earlier in the conversation, just the sheer size and the market force of big companies now, maybe more influential than governments. I think it's particularly true with technology firms. Can you talk a little bit about the size of firms and technology companies under your treatment of dynamic capitalism? Any comments on that?
Yeah, there's some really other people who focus on this question entirely, which is monopolies. Matt Stoller, I think we talked to him at some point in our research, is a guy out of Washington who really looks at the monopoly issue. And so what Seth said earlier, right, about lowering prices also resulted in companies growing huge. And so they've overtaken the government now in a lot of ways. And I lost my train of thought.
Big tech firms.
The big tech firms, yeah. These are such big topics, right? So we use the example in the book of Kodak. I'm going to say this, and then you can kind of apply it to the modern day, right? And the trajectory of Kodak was that after it made this incredible invention, I don't know, the late 1800s, early 1900s, it really controlled that entire world of photography, right? Every piece of film in the world had to be shipped back to Rochester, New York to be developed. Kodak just had this incredible control over the market. And then various things happened, and Kodak did had a great run as a company, but didn't adapt well enough to the advent of digital cameras. Everybody knows that story. But the underlying story here is that Kodak in its heyday, and even for many decades after its heyday, employed 80,000 people to do that work of film development. And it was, I forget the revenue size of the company, but it was not huge, right? It was big, but the number of employees in relation to its revenue was small. Was it great or big? But nowadays, right, the companies that we have now that are the monopolies and they're doing, or duopolies or whatever they are, right? They're controlling a lot of the economy, and we're not really even getting much in return for that, right? So there's hardly, when you relate their profits to their number of employees, it's really small. That's the way sort of I look at it, right? It's that if you're looking at companies as a mechanism for generating revenue and spreading around society, the companies of today just aren't doing a good job at that.
So we're definitely not anti-tech at all, right? I think one of the things we just acknowledge in the book is that companies are getting more and more powerful. They're huge. They're bigger than, Walmart has top line sales greater than the GDP of like almost every country in the world, right, globally. And so, we want to acknowledge, and a lot of the book talks about like what is the role of business in our society and what are the checks on that role, right? And we're seeing this a little bit right now in terms of the influence that individual companies and CEOs have over decisions that get made. And it's another reason that I think we need to bolster government in different ways in order to protect it against those sorts of influences, right? Because companies exist to perpetuate themselves.
Or maybe that's the rule of law question, right?
Yeah,
that governs our relationships, right?
But I think it's interesting to just note, like the distrust right now of, I think tech companies in particular. I think that what underpins that is this belief that they're somehow exploiting individuals, right? That you are the data, that kind of stuff. And I don't think that's been good for society, and I don't think that's long-term good for our economy either. And so, one of the solutions I have, which is like super self-serving because I'm a venture capitalist, but like more technology innovation is good, right? And I think what happens when you don't allow for that is that you end up with big monopolies that get bigger and bigger and bigger, and then either you have a government who breaks them up, or they just consolidate power. And so I think one of the things that we don't talk about this in the book, that I'd argue for is, but the US has always been separated from the rest of the world by the strength of its innovation economy. Not every innovation, important innovation in the world has come out of the US, but a whole lot of them have been invented here in the United States. And we need to keep that going. And there are some structural things that are occurring that are potential brakes on that. And I think that getting rid of those brakes actually ultimately benefits consumers more broadly and benefits our overall economy more broadly.
Very good. So a chance to hammer home the point. Your vision of dynamic capitalism, why is that so important for entrepreneurship and vice versa?
Yeah, because for two reasons. I think that AI will result in fewer jobs and more entrepreneurship. And so we really need to widen the pathways for entrepreneurs to succeed. And that, I think, means untying some of the regulatory structures, some of the things that Seth are talking about, so that people have an easier time starting and growing companies. So that's the first kind of for entrepreneurs why I think dynamic capitalism is important. But the second one to me is that entrepreneurs generally are the builders of the world. And I've seen this over and over again, that they build their companies and then they go on to do something outside their company. Seth is an example, right? And so we need successful entrepreneurs because they end up being the pillars of society. They do end up being the people who establish new institutions, which is what we're going to need.
And more fundamentally, and I think just more personally, like part of the challenge that we give to readers in the book is like, what kind of world do you want to live in? And we outline dynamic capitalism as a alternative future that's, at least to us, the kind of world that we want to live in, right? Where companies aren't just trying to create profit, but understand that they have a role in society, but not overstepping that role. And I think that finding that balance is what we argue for. And I think we argue for it because it's the kind of world we want to live in.
Awesome. All right, so this is my final question before we open it up to the audience. So get ready with your questions. You guys are winding up a book tour, if you will. You've been on the stage. You've done these sorts of things in the past. I want to give you a chance to ask each other a question. And so who's going to go first? Who should I put on the spot? Seth, do you have a question for Elizabeth?
Of course. We've done a lot of events. What's your favorite?
Oh, no, you took the easy question. You came out with an easy one. Well, I'm enjoying this one very much. We haven't seen each other in a little. We haven't seen each other in a little while. Yeah, I mean, I'll tell you what, it was pretty special for me because it was my hometown when we did that Politics and Prose event, and we walked out and like it was like standing room only. That was pretty cool. Yeah. And now I have to ask.
That was pretty
question.
Cool.
Are we feeling?
Not a softball. Let's really get one.
No, I want to ask a question that like comes from our history that I've always wondered about and we've never talked about. That's what, this is like my journalist mentality, right? Well, I kind of want to know what you thought of me when I told you many times, right? I thought it was a little crazy. You were working in the West Bank as a venture capitalist. So what did you think of me?
I think the thing I was like, why does she keep coming here? Like I kept seeing you in Boulder. I'm like, you don't live in Boulder. Like, why is she here?
Because I was working for that mortgage startup. That's why I was here a lot.
You just say I didn't know.
Okay.
Well, Seth and Elizabeth, we're glad you're
I thought you asked a lot of questions.
I do.
All right, thanks, guys. All right, let's open it up for audience questions in true Silicon Flatirons fashion. A student gets the first question. You're a student, right?
Yeah.
All right, Drew, I can play a role in this.
Thank you. I just want to touch on a couple things you were mentioning, Seth. You were mentioning how companies should orient towards the long-term and long-term value creation over living quarter by quarter. And you also mentioned the importance of democratizing access to financial markets where not everyone can invest in private companies, for example. It seems to me that it's more beneficial to companies to remain private because that allows them to not focus quarter to quarter and focus on that long-term value creation. But it's hard for everyone to be involved in private markets because you have to be an accredited investor. So I was curious what solutions you had as a VC to democratize access to private companies if this seems to be the route that companies are going towards and becoming more popular.
Yeah, I think that's a really important question. First, thanks for wearing your whoop. Appreciate that. It's one of our favorites. It's a good one. I feel strongly that, so we have this like paternalistic view of the state, right? And almost everything the state does is to prevent people from messing up, right? And the way that we dole out benefits, prove to us that you are whatever, looking for a job or doing this or doing that. And it's not that there shouldn't be accountability, but I think we go overboard. And one of the ways that we go overboard is we say to people, basically, like, you're not sophisticated if you're not rich. And I think that's bullshit, right? I know plenty of people that don't fit the accredited investor qualifications who are very sophisticated. And I know plenty of rich people who are dumb as shit. Right? And some got lucky and some just inherited, whatever. So I would love to see us change the rules around that, right? And you know, when you think about it, like the fundamental rules around securities date back to the 1934 Securities Act. Like we're bumping up on 100 years here pretty soon. The world looked a little different back then. And so I feel that we can change those rules. The Jobs Act was like sort of a step in the right direction, but it like wasn't anywhere close to the step that I think it should take. I also think that there are some people who are experimenting with some different sort of financial markets models, public market models that would allow companies a bit more flexibility from quarter to quarter. Eric Ries in particular, his new book, 𝗖𝗽𝗶𝘁 it's not out yet, but I've got a chance to read it. Highly recommended. And he's got some ideas. He's working on this very specific issue. How do we create an exchange, public market exchange, that allows for companies to essentially sort of report in different ways so that they can smooth things out over a longer period of time. And, you know, maybe it just takes some gutsy companies. I mean, when Google went public, they had famously had the letter from Larry and Sergey that talked about, like, we're not going to operate quarter to quarter. Now, they had a huge cash engine. They were also acted in super monopoly ways as well under that cash engine. So maybe that's what, you know, made that successful. And it's only one example. But I do think companies can and should be more bold about thinking through how they report quarter to quarter versus not. But it's hard to do, right? Because when your stock drops by 80% because you missed a quarter, I get the pressure. And by the way, the average tenure of a CEO of a public company is like 3.6 years. Yeah. That also doesn't help reinforce taking longer term bets. And when you look at companies that actually are able to do that, and the reason they're successful, one of the reasons is they've had longevity in the people at the top.
Makes sense.
So can I just add to that one quick thing, which is that I also think it's a good idea to open up private markets more, but I also think we need to increase the level of transparency in the private markets. Are you calling on people or?
We've got some more questions here.
Thank you both.
There you go, Drew. All right.
Thank you both for speaking tonight. Where do you all stand in the comment or in the notion that if you give equal inputs to everyone on a wide scale, you're going to have equal outputs, right? The notion that if you give everyone $100,000, the money will find itself back into the same pockets as you started.
Wow, do I think that's, well, I don't think that's true in our economy today. Are you asking us whether it should be true?
No, I'm asking if you take the position that you can change that concept.
Oh, well, since I don't, yeah, I think you, well, I guess it's about the length of time, right? Nobody's ever asked this question, but it's about, if you believe that's a fundamental law, then it would be about the length of time and the distance traveled for that $100. And I think you definitely can change that route.
So?
Right. We've got time for more. Oh, Seth, did you want to take this?
I know, it's a big question.
Yeah, no, it's an interesting question. I mean, look, I fundamentally believe that. I mean, this is the thing that I think is true about society, and that people sometimes ask, like, what's the one thing you would change in our like economy, basically? Like giving more equitable opportunity. Because I actually think that the distribution of outcomes is highly skewed giving people an equal starting point. People will do very, very different things, right? And I think one of the challenges with our economy is that we don't do a good enough job of giving people, I'm not going to say equal because that's just not realistic or how things work, but giving people sort of some base level to start from, right? So education, access to capital, things like that. But actually fundamentally, I think if you gave 1,000 people $100, they would end up in really different places in relatively short order.
All right, Drew, I see another question there in the gentleman in the black.
Yeah, so kind of actually.
Just wait for the mic because we're recording this.
Kind of tacking off the first question, because I know plenty of CEOs of private companies, they have incentives to stay private. Like there are a lot of incentives to stay private. And I guess the question, one of them being, you don't have to be transparent. Like you just don't have to be as transparent. So the question is, how would you two think about, I guess, nudging or encouraging these CEOs to be more transparent? Because that's a really, like saying it, like you two have said, is one thing, but actually like getting to it, that's a really tall order. That is, that it's dependent on the other person too, the CEO.
Well, I think you have to look at the question of, how did we build neoliberal capitalism, right? I'm going to turn it back on you. It's not so much to go into it and think it's so hard to do. It's that you have so much power once you recognize that's the change.
That's what I'm saying. And so if we're trying to create more ethical, sorry, that's what I'm saying. If we're trying to create more ethical outcomes, how do you, not necessarily ensure that, but like make sure people are working towards that? Because as you just said, the incentive structure is skewed the other direction.
Well,
I'll give you an example from something that happened to me today, because I think that actually there is some power. This is where employee ownership, I think, actually really helps, right? So one of the things I was working on today is I have a company that's very large that should be going public, but for a bunch of different reasons. And they're actually starting to get pressure from employees who are like, hey, I want some liquidity for my, and so I think one idea would be to create the ability to transact more broadly private market shares, but in exchange for some level of transparency, right? Because one of the challenges, by the way, the question or my response to the question that CEO is like, I'm happy to help you try to find some buyers, but like, what can I share with them?
Yes,
right.
And I think you do it, there's other forces too, right? We can still change laws. Not easily, but and there are also market mechanisms, right? So you can start a company that actually forces some level of change and transparency in the private markets.
But doesn't that reinforce itself? So like I applied to the program I'm at here at CU with a focus on AI, and like AI is in the process of developing, derivatives that it doesn't even understand. It just I feel like wrangling that's just really hard. It's just it feeds itself.
I mean, look, I mean, as a capitalist, I think about what are market solutions, and so I guess what I would say to you is I would personally be in favor of, right? Like I think we think of transparency as like public market transparency or no transparency, and I think that's actually. There are increments along the way, and I think we could create a set of laws that say, look, when you are this big, measured by revenue, employees, however you want to do it, there's a certain level of transparency that you need to then offer, and that doesn't need to be quarterly, what you would have in a 10Q filing, right? But it could be, and then when you're at this other size, right, you could have, and this is a little bit of what the Jobs Act tried to actually remedy, right, was that you had 500 employees, you had to be forced to go public. But again, it was an all or nothing. So I think my real answer to your question would be, I would probably set a series of gates and require companies based on their size to comply with those gates, with transparency laws at each of those gates.
Thank you.
All right, we have a gentleman in blue who I think your hand was up first, so we're finally getting to you. And folks on this side of the room, please shoot your hands up. We're coming to you next.
So you talked about how it was bad for companies to live quarter to quarter. Well, that's because the stockholders forced them to do that, and they didn't do the long-term things. They just did what was the best for the next 90 days. But you also knocked companies to stay private, and because they don't want to answer to the stockholders for quarter. So it's almost like you're talking out of both sides of your mouth when you say that.
Well, it's
and the other thing,
we're in the middle. That's
and the other thing is you'd mentioned that Kodak has 80,000 employees.
Had.
That's socialism. That's not capitalism. I have bad news. They're betting that the first, not if, but when there'll be the first $1 billion company with 10 employees, it's going to get worse, not better.
So a couple of responses to that. First is, we were not advocating for companies to go public because we think they need to go public, right? Like the answer to this last guy's question, I think, is exactly right. I'm not around forcing our companies to go public, because I understand why they're not going public right now, because they're subject to those, whims of the market. So if that wasn't clear, we should clear that. The point about Kodak isn't that companies should be less efficient. It's to acknowledge that if you look at the percentage of top line revenue that got distributed to employees in the form of wages, and you track that over time, it's gone significantly down. And so it's the argument for an ownership economy. Companies used to do a good job, because that was just the nature of the work of distributing that top line in the form of wages, because that's the main input to a company was the people that work there. As that's gone away, we need to find other ways to compensate for employees. Now, there's some companies that do a good job of that. Publix is a good example. It's the largest employee-owned company in the world. And by the way, they are more profitable than the average grocery store, and they have more loyal customers. But by a bunch of other metrics, are performing better. And so I think our argument isn't companies should be, and certainly we actually say this directly in the book when we talk about this, it's not that companies should be forced to hire more employees. That doesn't work at all, and we're capitalists. It's to acknowledge that we are distributing sort of top line, if you will, in different ways. And what's happened is more of that top line now gets distributed to shareholders, but there aren't as many shareholders as there are employees, right? Only 60% of people own stock of any kind. And so we need to find other mechanisms for allowing people purchase on the economic ladder. And if we don't do that, I think the argument is what happened in New York, which is a bunch of people saying, yeah, free buses, free rent, all that sounds great. That's how we degenerate into socialism, in my mind.
It could also be that entrepreneurship, by the way, is the solution, right? Is it that, I don't know if it's a bad thing if everybody's running a $10 billion company, one employee, $10 billion companies, right? The economy is getting more entrepreneurial. And I think we should embrace that versus seeing it as scary.
You think that's possible?
Be more entrepreneurial.
That many companies? That's not possible.
We'll come back to that.
No,
We
not
have a
that.
question on this side of the room here. We've been neglecting you for 10 minutes, so please take it away.
Hi, thanks for taking my question. I'm wondering what your thoughts are on greed and natural selection, since your theory is on evolution.
It's in the book title. So is capital.
Well, I'm not sure my theory. I don't know if I have a theory about greed, and I generally think greed is bad, but I think that comes more from my church upbringing, because I think greed, as it functions in our economy, is actually helps you be a winner, as we define winning in like purely monetary terms. But maybe you could tell us a little bit more about what you mean.
Just that, so if we assume that the markets are inefficient and the markets are irrational, and we have this movement more towards not caring for society, and we have put shareholders as the most important, let's say we think of citizens should deserve certain aspects of being in a society. And now companies are now the most powerful entities in our world. Should those companies, how do we view the new companies? Can you shame them for greed and create more entrepreneurship that way for more private markets? Or is greed just inherent within the evolution, and the natural selection will be the greediest people will be able to be the most powerful?
So we talk about this actually in the book. And one of the fundamental underpinnings of neoliberalism is this idea that people are inherently greedy and self-serving. Right. And Friedman believed that very much. Right. And he designed a system that sort of played off of that. But the reality is, and this is what we talk about in the book, that that's not actually how most people behave. Right now, so there's some people that are driven completely by that and are sort of outliers, but most people actually make decisions based on a whole bunch of different factors. And one of the things that Lisa Green Hall said to us, she was the inventor essentially of impact investing, unfortunately passed away shortly after we interviewed her for the book. But she said to us, don't forget that companies are run by people. Right. And so when we quote like Apollo, for example, this huge asset manager, and the CEO of Apollo talking about how they want to invest in good companies doing good. And we talk about how that all sounds great, but that's giving a lot of power to a couple of people to decide what good is in both those instances. But I think from our worldview, we actually don't think most people are inherently greedy. And we think that if you design an economic system that treats people like they are, then that's sort of the output that you get. But if you design an economic system that acknowledges that people have different and balanced views around the world, that they will actually make real decisions. And to your last point, we talk a bunch about the role of consumers, and the role that consumers can play to shape corporate behavior. But we were very careful to say that should not be that there's some litmus test and every company should somehow behave the same. And one of the reasons we argued, for example, for the rise of B corporations is because if companies were more explicit about what they were actually doing, rather than just making decisions and pretending like it was all for the benefit of shareholders, then anyone could make a decision about whether they wanted to invest behind that or wanted to purchase from that company. And so hopefully that gets a little bit. We talk about it more nuancedly in the book, but that's how we think about it.
Yeah, and I think I can add to that and just say that we live in a world of norms. And in fact, if you look at the history of capitalism, the generation that came after World War II did invent and live a kind of capitalism that did distribute profits more. That was not as
Dave, your wife's called.
That's not as quote greed driven as the one we're in now.
Interesting also, so Eleanor Engstrom, who was the first woman to win a Nobel Prize in economics, did a bunch of research on tragedy of the commons, which goes to this greed question. And it turns out in communities where people feel connection, tragedy of the commons doesn't exist, right? And you don't have to come up with explicit rules. When people feel connected, they don't exploit each other and resources.
As much, maybe.
Yeah, as much. But that,
right. But as much is what we're looking for.
Yeah, exactly.
Yeah.
And so we referenced her in the book as well. And so you'll see a little bit about that. But we talk about why that sort of feeling of community connectedness is important.
I think we have time for one last question. Is there another question on this side of the room? All right. Go for it, Drew.
In talking about the income inequality and I guess the distribution to the higher end and workers getting less. And then along with what happened in 2001, 2002, where companies were basically given tax credits and tax deductions for exporting a lot of manufacturing jobs out of the country, which is contributing to, I think, the malaise in the worker economy right now. And then with AI coming and the promise of eliminating far more jobs down the road, do you think it would be a helpful solution to set up a SBA kind of trust fund that would have to be funded by more taxation on corporations than present day, and then basically allow for a government private bank to help subsidize entrepreneurship. And much like the distribution, during COVID, of getting money out quickly to people, because otherwise with loss of manufacturing and loss of jobs through AI, there's going to be a huge hole in the economy where jobs just aren't going to exist in 5-10 years. And the problem is going to exacerbate. So what do you think about that kind of entrepreneurial trust fund idea?
We're going to disagree on this.
I think that there are probably solutions. I totally agree on your focus, right? And the pattern you're seeing, which we also recognized in the book, that a combination of policy and technology really destroyed a whole generation of American workers' families. The opioid epidemic is tied to that. And that we may see something similar again in the level of disruption. Although the economists right now are saying that this is more comparable to the level of disruption of the internet versus that 80s disruption. Hopefully, that's true. But to the second idea, which is really specific, I don't know, it sounds good to me, right? I think it's all about the details and how you could implement it. And I also think there are a lot of other probably easier changes that you could do to make entrepreneurship easier.
Definitely read the first book because we talk a lot about access to capital. And so like the concept of like, should we do as a society a better job of getting entrepreneurs more money? Absolutely, right? Because someone once said to me, it was too late to put it in the first book, but if you give someone a small amount of money, you force them to think small, right? If you give someone a little bit more money, you can open up their aperture a little bit. I would say, and I'm glad you made that point, E, because I actually think that what happened in the late 80s and 90s in terms of manufacturing moving offshore, by the way, super short-sighted, we're now trying to move a bunch of it back, but that was fundamentally different than what's happening with AI. That was a sort of economic shift. This AI is a technology shift. I'm more of a techno optimist, and so I'm sure there will be short-term disruption, and I'm not discounting that. But I also think we don't know what the new jobs are, right? And when there's sort of every technology change has resulted in a whole bunch of new jobs, right? I mean, really, if you go back 100 years, 120 years. 50% of people had made their living on the farm, right? Now it's 2%. So we've had these shifts before. The shift in the internet was another example of that. But even like when the automobile came out, right? I mean, how many people were involved in farriers for horses and things like that? And it was super scary technology. You had to like walk in front. So you had to hire someone to walk in front of a car with a flag. They were called flaggers because it was like so crazy, new, scary stuff. And now obviously cars are completely normal, right? So when cell phones came out, you thought people were crazy because they're like talking in the middle of the street or their earbuds, and you literally thought people were crazy in the street. And now we just take it for granted because it's become normalized. We're kind of in the very beginnings of that, and it feels scary because it feels super disruptive. And I think the thing I think about with AI the most, and we've talked about this as well, is we didn't write about AI much in the books. Like by the time you write about it, it's like old. But the gap, the knowledge gap around and the comfort gap of using AI. So what I'd like us to see around AI is not don't build data centers or don't use AI. Like that's to me is short-sighted and dumb, and we're just going to see the next century to China. But I do think that we can, and some of this was in this AI policy that was put out Friday. I do think that we should be investing more in training at the very earliest levels, like in kindergarten through.
Okay, I
12th
totally
grade.
disagree. We completely
People
disagree on
using AI, because I think that if they're not, I had this with one of my kids whose school was like, you can't use AI, and I actually called them up and I was like, we're going to not be here if that's what you think. Like that doesn't make any sense. So that's where I would spend more time investing, because I think we want to create more people that are comfortable with AI, and I worry about the schism that could happen with a group of people that are not comfortable.
A possible topic for your next book. There you go.
I'm glad we don't agree with it.
So folks, Elizabeth, Seth, thanks so much for writing this book and for sharing it with us tonight. A defense of capitalism, but a clear call for a further evolution towards a dynamic capitalism. Folks, join me in thanking both